Alright guys, quick question. Have you ever had or wondered what Forex is all about when people keep talking about dollars, euros, pounds all the time? You are just getting confused and you don't know what it is? Now in this video, I'll break down what Forex really is, how it works, and who is actually trading it. And I promise not to complicate this, and you're going to learn about how people are actually making money from Forex markets. Now, so the first thing, what Forex is. Now, Forex is simply means foreign exchange. It is the global market where currencies are actually bought and sold. Alright, that's it. Think about when you travel, for instance, you exchange your naira for dollars or pounds at the airport. You've already participated in Forex trading just on a small scale. Now, imagine that same idea but in a huge level with banks, government, and traders all over the world. Now, that is the Forex market, and get this, it's massive. We are talking over $7 trillion traded every single day, bigger than even the stock market and the crypto combined. And unlike the stock market, Forex open 24 hours every single day, 5 days in a week. Alright, now we usually trade in London, New York, Tokyo, and Sydney. That's how the trade actually moves. Okay, now how the Forex works. Okay, so you're actually thinking how the Forex works. Now, currencies are actually traded in pairs: the euros to US dollar, the GBP to US dollar, and the US dollars to Nigerian naira. The first currency is the base currency, while the second currency is the quote currency. So if euros to USD is at 1.10, it means 1 euros equals to 1.10 of the US dollar. Euro to USD is at 1.10, that means 1 euro is equals to 1.1 US dollar. While euro stands as the base currency, then the USD is standing as the quote currency in this currency pair.
Base currency and quote currency. 1 USD to Nigerian naira is equivalent to 1,500 naira. The USD is the base currency and the Nigerian naira is the quote currency. 1 US dollar is equivalent to 1,500 Nigerian naira. You can either buy the pair or sell the pair. If you think the dollar will get stronger than the naira, you buy the pair. If you think the naira will get stronger, you sell. What makes market prices change? Things like economic news, inflation, elections, global events, central bank policy are things that causes changes in price in the market. The core principle that affects the way prices move is simply in supply and demand. Confidence equals buy currency, fear equals selling of currency. In Forex, prices move because of demand and supply. When traders have confidence in a country's currency, demand rises. Higher demands means more people are buying it, and in return more buyers pushes the price up. But when fear hits, traders sells off the currency. This increases the supply in the market. More supply with less demand makes the price fall. Confidence will lead to more buy, hence high price, and fear will lead to more sell, hence low price. Imagine it like this: when people have confidence in a country's money, more people want to buy it, and when demand is high, the price goes up. But when people are afraid that the money will lose value, they rush to sell it. More supply in the market makes the price fall.
Now, the goal is simple: predict which currency will go up and which currency will go down. If you think euro will get stronger than the dollar, then you buy euro USD. If you think the dollar will get stronger than the euro, then you sell the euro USD. If you are right, you make money, and if you are wrong, you actually secure a loss.
Let's talk about some of the factors that causes the change in price in the market. Interest rate. If a country's bank raises its interest rate, investors want to keep money there because they will earn more, which leads to more buyers and pushes the price currency up. But if the bank cuts its rate, investors pull money out and causes the currency to fall. Inflation. When things in a country get too expensive, that's inflation. The money buys less, so people don't want it and causes the price to fall. But when prices are stable, the money is trusted more and the prices goes up. Politics and events. When things and economical events are stable and peaceful in a country, it makes people trust its money more and further increases the price and value of such a country's currency. However, bad economy, war, crisis or bad politics scares investors, which leads to fall in price. Job and employment. If more people are working and the economy is strong, the rate of employment and job opportunity is high, investors trust the country's currency and prices then increases. Lack of employment, loss of jobs and weak economy will lead to lack of confidence in the currency of a country and price will drop. All this boils down to the principle of demand and supply. Good news creates confidence and more demand, hence the price goes up, while bad news creates fear, more supply and the price goes down. It's not magic, it's simply just buyers and sellers reacting. The stronger side always decides where the market moves towards. Understand the principle of demand and supply and you understand Forex.
Now, but what makes these prices change? There are a lot of things that causes inflation, economic news, election, global events, and central bank policy. Basically anything that affects a country's economy can actually move this currency rate and make this rate to fluctuate. Now, there are a lot of people that trade in this trading market or in this forex market. So who really trades forex? Now, big banks and financial institutions, they move billions every day. They are one of the biggest factors that are responsible for affecting the rates of which currencies are being exchanged. Companies, especially those that are doing international business, also affect the rates of trading or of rates of foreign exchange. Government and central banks, they step in to keep the economy stable. And then, of course, everyday people like you and I, we are actually known as the retail traders. These are the everyday people that go into the market to trade simply for just making profit. Now, thanks to online brokers, you can actually open an account and start with as little as $50 to $100. So yes, forex isn't just for billionaires. It's actually accessible to anyone that is willing to learn the art of trading. Now, why people actually trade forex in the first place? Why do people love forex? Now, the biggest financial market in the world is actually forex for a whole lot of reasons. It opens 24 hours, so you can actually trade almost anytime. You can start small even with just your phone. Okay, now there are chances to profit whether currency goes up or down. Of course, let's be real, there's also a lot of risk. You can lose a lot of money quick and you can make it as well. That is why learning and practicing is actually very, very important. Okay, now forex is basically a global marketplace for currency where banks, company, people like you and I and all of us, we all trade. Okay, in the next video I'll break down types of currencies in forex, the majors, the minors, exotic. You understand what is actually being traded. If you made it to these videos to this end, please drop a like, subscribe and let me know in the comment section what you like us to do next, and we'll learn more as we go in this our journey to become a professional trader in the forex market. Thank you.